Welcome to Chofia FS. Please, you need to watch this video to the end. Your eyes will be open and your understanding will be enlightened.
Yes, in today's lesson, I'll be teaching you time frame allocated to each traders. There are time frame allocated to each traders. If you're a scalper and you exist the time frame of scalping, you will enter loss. If you're a day trader, you exist the time frame of day traders, you will enter loss. For example, let's say that this market move from here to this place. This is weekly. Let's say this is weekly, and then this is daily now. This is 4 hours, 1 hour, and then this is 30 minutes. As a scalper now, let's assume that you set this market from here, from 15 minutes here. You should take your profit at 30 minutes here. Because if you didn't take your profit here, there's some other higher time frame that is still above this 30 minutes. So the market goes up. You know that this market is actually bullish. But as a scalpers, you can trade against the trend, because in your time frame, the market might be bearish in your time frame. So, but in a higher time frame, the market is bullish. So if you set this market from here, you should take your profit at 30 minutes, because there's some other higher time frame that is above 30 minutes. So the market will violate it and go and take 1 hour from here. This is 1 hour. So if you set this market at 1 hour, as a day trader, you should take your profit on 4 hours, because there is a day time frame, or there is other time frame that is still ahead of 4 hours. So the market will always go toward the higher time frame. It will go and pick up the higher time frame. So by the time that this market, if you violated or you refuse to take your profit, if this market goes up, returns back here, you're already in loss. It will come back to daily. And then go back to weekly. So let me give you this. If you are a scalper, you should be working with 30 minutes to 15 minutes, and 30 minutes to 15 minutes. If you're a day trader, you should be working with 1 hour to 4 hours. And if you're a weekly trader, you should be working with daily. You should be working with daily to or 4, yes, daily, and then 4 hours. 4 hours. You should be working with daily and 4 hours. And if you're a monthly trader, you should be working with weekly, and then daily. This is how it is. These are the time frame allocated to each trader. We have scalpers, and then we have daily traders. We have like weekly traders. Those are just like in front of swing. And then we have position traders. These are the major 4 types of traders, and their time frame that is allocated.
To throw more light on this lesson, I'll further explain it to you, the reason why support and resistance break, and why you should maintain the time frame allocated to your trading system. Let's assume that this is 30-minute resistance. Let's mark the 30-minute resistance. This is 30-minute resistance, right? This is our 30-minute resistance. And I says that as a scalpers, you are to trading between 1 hour and 30 minutes. Assuming that as a scalper, let's go back to 1 hour. Can you see? This is your 1 hour support. This is your 1 hour support. Your 1 hour support is here. Immediately this market hit this support, it begins to retrace back to a 30-minute. So if you buy this market, let me just say, if you buy this market from this 1 hour, you are to take your profit at 30 minutes. You have to take your profit at 30-minute resistance. Failure to do that, the market will retrace and break this 1 hour. Let's go back to 30 minutes and see what the market is doing. Immediately the market hit 1 hour, it began to retrace back to 30-minute resistance. Can you see? This market begin to retrace back to 30-minute resistance. The market dropped from this 30 minutes, come back to 1 hour, and retrace back to this 30 minutes to give us a double top. As a scalper, if you buy this market from 1 hour, you have to take your profit at 30-minute resistance, because once this market break from this 30 minutes, it will not stop at this 1 hour again. It will come straight to a 4 hour support, because 4 hour is still below 1 hour. 4 hour support is still below 1 hour. Can you see? So what time frame do is that? It respect each others like resistance and support. Respect each other based on the time frame. So you see, immediately this market reach this 30 minutes, it began to reverse back. So once it reverse, it will not stop at this 1 hour support again. It will come straight to this 4 hour support, because 4 hour is still below 1 hours. So likewise, if you screw back to a daily, you see the daily is above this 4 hours. So first of all, because, and we say dailies and 4 hours goes together. If daily is the resistance of 4 hours in this situation, in these scenarios now, market have already touched daily. So any other time frame between, in a space of daily and 4 hours, the market will wipe them out to come and meet up with 4 hour. Can you see the market have take off 30 minutes, come and tested 1 hour, begin to reverse back. So it to take off that 1 hour and come back to 4 hours again. This is how time respect resistance and support. Resistance and support work based on time frame allocated to them. So as a trader, you need to understand the type of traders you are and the time frame allocated to you, so that you will not violate it. Once you violate your time frame, you will enter loss. So that is us. I hope you understand this video. If there is any questions that you have to ask, drop your question in the comment.